If you don't know who I am, my name is Khleif, and I'm host of the Lifetime Cash Flow Through Real Estate Investing podcast, which I'm blessed to say is the largest commercial real estate podcast out there in the world, really. We're over 14 million downloads. I'm author of the #1 bestseller, How to Create Lifetime Cash Flow Through Multifamily Properties. And today we're going to go deep on due diligence, and I mean go deep. Okay, so this will stay live on YouTube, and it'll also be live on my Facebook page. But anyway, so we're going to talk about multifamily due diligence in great detail. So let's get into it. All right, so what is due diligence? All right, so due diligence is basically assessing risk. Whenever you buy, even if you're buying a business, you're going to do due diligence, but when you're buying a multifamily asset, you've got to assess risk. You've got to check everything out, right? You got to look under the hood. And so, it doesn't matter if you're acquiring an asset or if you're developing a new one or renovating an old one, you still have to do the due diligence and assess risk. So let's get into it. So who performs the due diligence? Well, typically the buyer does it, but very often the buyer will use a third-party property management company. And for example, we've got an asset under contract right now in Nashville, Tennessee. Beautiful asset. By the way, if you're accredited, you definitely should check that out. We've got some slots left. Just a gorgeous asset. But when we did the due diligence on that, a couple months ago, we had several teams from the property management company helping us do it. So I'm getting a little ahead of myself, but that's how this is done. And by the way, if you are accredited, put the link in all the platforms here to check that out. We are doing a webinar on that Monday night at 8 p.m. So this coming Monday at 8 p.m. we're going to do a webinar on that. So a lot of times the property management company will use a regional supervisor to oversee that due diligence process. And like I said, they'll bring in teams, they'll have software that they use. I'm getting a little ahead of myself again, but because I'm going to get into all this again. But very often the regional will oversee and maybe even manage that process, or you as the buyer will. Okay, like I said, they may be regional and they may bring in a larger due diligence team, a discovery team from a third-party property management company. By the way, at the end of this thing, I'll tell you how you can get this book. It's a book I wrote on the complete guide to multifamily due diligence, and this is not a little book. You can see, but I'll tell you how you can get it at the end of this thing. And actually another resource as well that's an incredible due diligence book. I'll tell you how to get both of these at the end of this thing. Okay, so what are the types of risks that you need to look at? Now this top one is really timely, right? It's inflation. What's inflation doing right now? Good God. I'm in a lot of liquidity right now because cash is king when stuff like what's happening is going to happen, but it's killing me because inflation's eating it up. What's happening with interest rates right now? Today, the interest rate went up again another 75 basis points. That's 0.75%. So you're assessing that. You're looking at management efficiencies. How well have they been managed? Like that Nashville asset wasn't managed well at all, so that means opportunity, right? What's happening in the market conditions? Obviously, lots of market condition changes happening right now because of what's happening economically and what's happening with these two things, right? What does the property need as far as physical improvements? Is there any obsolescence? There's something called functional obsolescence, and functional obsolescence actually is difficult to overcome because that's like small rooms, small windows, low ceilings, things that are hard to fix. By the way, my team has the comments up here in front of me. Hopefully I can see them. If you post a question, I should be able to see it if you want to ask a question. But I'm going to answer a lot of them. I'm just going to tell you that right now. All right. And then, what's the staff performance like? And that's one of the problems at this particular asset that I was just talking about. And then there's, what's the neighborhood or the community look like? Those are things, and is it changing? Is it declining? In our model, when we buy an asset, is we buy it and we hold it, and and then if the market stays stable or it continues to increase, we'll stay in until the cows come home. And then we'll refinance, give our investors their money back. But only if the market starts to go down, then that's a completely different story. Then we'll get out. This is kind of an overview of the things that we're going to talk about and dig into in greater detail. So what are you going to be looking at? You're going to be analyzing the rent roll, right? You got to look at the rent roll. You're going to be looking at the service and maintenance agreements. And I would put them all out for bid again. Are there any governmental compliance issues? Okay, is there a certificate of occupancy needed? Fire related, things like that. You need to check online and see if there's any documents that have been recorded or issues or pending litigation on the property. Of course, you're going to do a full physical inspection. We're going to dig into detail on all this, guys. Are there, what are the potential tax issues? Obviously, the taxes are going to go up. That's a newbie mistake that gets missed. So, we got to look into that. What's going on with the insurance? Have you put it out to bid? And what does the claim history look like? Okay. Are there any issues with the management company, claims from the management company? What personal property goes with the asset? What are the market conditions? So again, all this stuff we're going to go into in more detail. This is kind of an overview. Okay, so the first thing is the market analysis that we're going to talk about. So, market study is what you need to make an informed decision, to make an educated decision about this asset, right? And to decide on the price and to whether or not you're going to move forward. And what you're going to do is you're going to look at the regional trends. Like when I say regional, it might be more than one state, or it may just be that state. You're going to look at the MSA, the Metropolitan Service Area, what's happening there. You're going to also look at economic trends nationally. You're going to look at economic trends in the state and economic trends in that particular geographic area. And you're going to want to list them and describe them and study them. And I'm going to give you websites so you can look at all this stuff. So don't sweat this. I'm going to show you how you can do all this. But these are the kinds of things. And again, don't be intimidated by this. Have fun with this, because once you play around with it, and that's the operative word, play. Once you play around with it, you'll find it's just not that bad once you get into it. It's not that bad to get into. So again, these are the three components of the market analysis. You're going to do regional and the MSA. MSA would be like a Tampa or a Phoenix or a LA. That's a Metropolitan Statistical Area is what MSA stands for. It's a big region. You're going to do a neighborhood analysis. The specific neighborhood or submarket in that where that asset is. And then, of course, you're going to do an analysis on that subject property, the one you're looking at, the one you want to buy. So, okay. And by the way, I've never taught this before. This is new for me. I've created this, but this is new. So if I fumble a little bit, it's because I've never gone through this before. My other due diligence presentation is a little bit different. This is much more comprehensive, actually. So analyzing a region. So you want to know what's going on in a particular, area. What's happening economically with industry? What big employment types of employment or employers are there? What's the employment diversity look like? Because what's the number one thing with multifamily? It's jobs. Okay, so what's going on? And so you want to look at the economic conditions in the larger geographic area, see what industry is there, what factories are there, what's the demographic that's going to rent the asset that you're buying, and is there work for them there? So that's an example of what you're doing. So these are some of the websites that you can use. Now these, again, you'll probably have to screenshot this or something if you want these, or just come back and get them later. But census.gov is an awesome website. I'm going to give you some other ones too after this. Census.gov is awesome, and you can go do the American Housing Survey inside of census.gov. You can go to the U.S. Bureau of Economic Analysis, BEA.gov. You can look at state and local governments, state-local.gov.net. So these are all great resources for information. Don't get overwhelmed by this. You don't have to do all of them, but these are just resources for of course, local chambers of commerce, economic development offices. Great place to get information. Now they will, of course, try to sell you on the area, but you want to ask them not just they'll tell you how many businesses are moving in. You want to know what businesses are moving out too, right? So keep that in mind. And then the National Apartment Association puts out stuff. They have a survey, so that's also very helpful. And I'm going to give you some other websites that are even easier than these in just a second. Okay, so what are you going to look for when you're doing your searches? You want to know if there are any zoning restrictions, number one, or any zoning changes. What if zoning is going to change that's going to impact your property either positively or negatively? Is that important to know, right? You want to know if there's any rent control situation, it may be on the horizon. There's been a lot of talk about that. And there are some states like the blue states that already have that. It's why I don't invest in the blue states. Not a political thing. It's just I want to invest in a more business-friendly environment, so I don't go there. But you know, they're even talking about it in some of the red states now. So that's important to pay attention to. Is it on the horizon? Is it up in the legislature? You know, you want to look at building code restrictions. You also want to look and see what sort of historical complaints and you know, with the health department or with the building department have been assessed against this property. If you see a recurring complaint like the sewer line clogs up all the time, is that important to know, right? And you're going to look at the infrastructure. We're going to go into great detail on infrastructure here in a minute, so don't worry about that one. But that's the kind of stuff you're going to be checking when you're doing your research. Now these three websites you need to write down. These are easy to navigate and they're incredibly powerful. bestplaces.net, city-data.com, and datausa.io. And again, you want to play around with this, okay? Don't get overwhelmed by it. Put in where you live right now. See what shows up there. Then take a look at, you know, the area that you're interested in buying in, the submarket you're interested in buying in, and just play. And again, just wallow in it. Have fun with it. Again, don't be intimidated by it, but just, you know, you're going to be checking quite a few things. I'm going to tell you what you'll be checking here in just a second, or maybe it's on the next slide. Oh, here we go. So these are the kinds of things you want to know in that neighborhood. What's going on? You know, first of all, what are the amenities? Are there any parks and things for people to do? Are there educational facilities, entertainment venues? What are the jobs like? That's the number one thing right there, jobs, okay? Is there shopping? Is there a shopping mall or a shopping area? What's the job growth like? Okay, very important. What's the unemployment rates? By the way, even if you're not accredited, you should come watch our presentation Monday night at 8 p.m. on this property in Nashville, okay? There's a few slots left there. If you're accredited, you really need to check it out. But if not, watch what we look for. You'll see how we present a deal, the things that we look for, and you're going to recognize a lot of this stuff in that presentation because we talk about all these things, okay? What's the household formation in that area? So what does that mean? Like we've got an asset in Dallas that's all one-bedroom units, and that's usually a red flag for me. But that place has been 100% occupied since day one because that's exactly what that demographic is. It's young couples and single people, and they want one bedroom. Okay? Has the population been growing or declining? By the way, these websites, City Data, Best Places, Data USA, they have all this information. You know, other demographic data. What's the age of the population? Median income, median age. Population size, how many people live there? What's the density? You know, all this stuff shows up there. Median age, median race. What sort of transportation is around that property? Is there any public transportation? Very important. You know, genders, income levels. So again, that's median income. That's all on there. This is super important. Any planned infrastructure improvements. Sorry, you can't see that. Or neighborhood government. You know, I think that's also, what's that at the bottom of that slide? Neighborhood government what? Associations. Okay, are there any of those? Okay. So, you know, what's the rating of the schools? Are the schools great or not great? If you've got families like this asset in Nashville is all 3 bedrooms. And so there's lots of kids. Schools are really important and it just happens to have fantastic schools. But that's super important. So these are the kinds of things you're going to look into. And again, by the way, if you've got a question, throw it up. I can see them here. They've got monitors for me. So I can see them if you've got a question about any of this. So you have to identify what the neighborhood boundaries are for this particular asset, because I can tell you, things can change drastically once you cross a highway. You've heard, you know, the expression, the other side of the railroad tracks. Well, I think I even threw that on here. Yeah, I did. I threw rail tracks on here. But really, it's typically highways or roads, or it can be a river or a natural boundary. But you got to know what the boundaries are, because you know, you can literally go from a great area to a not great area, and you need to know that. So it's very important for you to identify what the boundaries of that neighborhood are, and then you can, you know, fully evaluate that neighborhood if that makes sense. Okay. So you know, competition will play a role in that perimeter, and you know, you just use a map and you can map out. You know, if you watch that presentation we're doing Monday night on that Nashville asset, you'll see how we've mapped out where the jobs are. We've mapped out where the retail is, the kind of retail. All that stuff is all mapped out. And it's very, very powerful visual that we show potential investors why we love that asset. Okay? All right. Now, analyzing the competition. You know, these are some of the things you're going to do. You're going to look at property records, your public records. You're going to review any publications. But this is the big one. You're going to shop them. You're going to go, you know, once you're doing the due diligence, you need to go mystery shop the competition. Like when we were in Nashville shopping this, mystery shopping that asset, we went and looked at every single comparable property. We pretended we were interested in renting, found out how many vacancies they had, what they were renting, compared the features and benefits of those assets with ours to see what we have to do to match those or be better than those ideally. And that's what we're going to do there. And so, but the only way to do that is to go visit them. You can't actually do that over the phone. But you're going to talk to local multifamily brokers. They have a lot of information. You know who even has more information than those is property management companies. You definitely want to talk to property management companies. I will tell you, we learn more from property management companies in a market that we're going to get into than pretty much anybody else, because they've got their ear to the ground. They know where the jobs are. They know where the type of people that are going to rent that place, the demographic makeup. They know how to best market that asset and all of that. So keep that in mind. I hope you guys are getting value from this. Okay. Now, you also need to understand supply and demand. What's going on in that particular market? There's been a lot of building going on, right? And so you need to know what the absorption is. Now, obviously, supply is how many apartments are available. Demand is what the need is for those apartments. If supply is less than demand, then the value and the rents go up, right? But if the demand is in decline and there's lots of supply, rents are going to go down. Okay, so these are important things for you to know. How much, what's being built in that market? How many properties, how many assets are being built so that you can, properly assess that. Khleif, yes, it's the same webinar, buddy. There were a lot of people that didn't get to see it. I'm looking at the questions here. There were a lot of people that didn't get to see it, so it's the same webinar. Heath just purchased your book, Rod. Love your channel. Thank you, my friend. Is there an accessible outline on this information? No, it's pretty much just here. Camera quality is better. Thank you. Okay. All right. Anyway, so supply and demand and absorption. So this is absorption, okay? How many units are vacant at the beginning of the period plus the units being built minus any that's being removed minus any vacant units equals the units that are absorbed, okay? So, when supply is less than demand, vacancy decreases and absorption is positive, okay? When supply is less than demand, vacancy goes down and absorption is positive. But when supply is greater than demand, there's lots of empty units, vacancy increases and there's a negative absorption is what that's called. Okay, and these are just terms for you guys to know. This is the nomenclature of this business. But you need to know what's causing it, okay? Is it market conditions? Is it the inflation? Is it what's going on economically? Or is it jobs leaving? What is it? What's going on? And it's important for you to know that. Okay. Now you're going to create a market rental schedule, and I'm going to actually give you a book at the end of this, like I said, that has the outline for the market schedule in here. It's called my tool book, and you can list the properties in here and do your market study. And I'll tell you how to get that in just a bit here. But you need to compare rent. What's the competition? You got to check and see what the competition is, right? So you've got to look at, what's the size units? What's the square footage? Are they 1 bedroom, 2 bedroom, 3 bedroom? What's the market rent? And then what amenities does each competing property have compared to your, the subject property? And you also want to assess market rent per square footage. That's a very easy way to do comparisons when you look at market rent per square feet. Are the competitive properties offering any incentives? It's important for you to know that. And because those are going to reduce the market rents. And again, you're comparing amenities. Now I'll tell you, a very common mistake is not to compare apples to apples. I just had a student send me a deal to review, because we review our students' deals, and they had a 12 unit with a pool, and they were asking me what the impact of that pool was, because very few 12 units have pools. And I said, well, it's going to have an impact, but it's not going to be that significant. So, certainly make it more desirable, but it may not equate to a whole lot of increase in rent. But that's the kind of stuff you need to know, right? You need to look into the amenities. So the property inspection. So you're out there, you're actually viewing and inspecting the property. And so, you're going to want to identify any issues with the property, including environmental issues, and you're going to document the exteriors, the interiors, the mechanics, the HVAC, the plumbing, the electrical, all of that. How's the maintenance been done? What does the leasing or business office look like? And what do the common areas look like? So this is all the stuff you're going to inspect, and we're going into this in much more detail, so bear with me here. But you've got to decide what your objectives are. How many teams are going to inspect? Okay, so what's your objective? You want to just identify any issues that you can bring to the seller's attention. You should have checklists for all the inspection teams. So there's software that a lot of them will use. One of them is Monday. There's some other ones as well, but where they're literally like the management company that met us at the asset in Nashville. They all had iPads. The iPads took pictures of the units. They documented everything, they rated everything, and it's just very quick. So you got to make sure they have proper recording equipment. If they don't have that kind of a solution, you want to make sure somebody's taking videos, somebody's taking photos, all of that. Okay. You also need to make sure that you're cooperating with the current management. Okay. They need to be in the loop because they're going to have to notice the tenants, legal notice the tenants. You want to have as little disruption as possible to the existing tenants. You want to make a seller mad, upset the tenants. And now I will tell you, sometimes the sellers don't tell the site personnel about that they're selling. And so you may just be doing inspections, okay? So it's very important that you know that when you go on site. I'm going to tell you one other thing that's not on the deck here, and that is you should talk to anybody that's walking around there. Like I found out about some issues with that Nashville asset just by talking to the tenants. There was some of the cars got broken into, and I know there was a fence that they were coming through that needed to be put back together. And so if I hadn't talked to a tenant, I wouldn't have found out about that. I'll tell you a more extreme example. I bought an asset in Louisiana, and I was talking to a tenant, 403 unit, big asset. And I talked to a tenant, and we had it under contract for $18 million. And I talked to this tenant. She goes, "Do you know about all the flooding in these lower units?" And we didn't. And so so I told my partner, I'm out. We're out. We're not doing it. Well, the seller took $1 million off the price. I'm like, okay, you got me. And we just sold that, by the way, for 28 a few months ago. But anyway, the point is that conversation saved me $1 million freaking dollars. Okay, so you make sure you have those conversations. Super important. Okay. Okay, let's see. Theodore, I must say getting started is difficult, in particular getting the funds. I will succeed. I like that attitude, brother. Okay, I like that attitude. Listen, come to my boot camp, by the way. I've got a boot camp coming up. The link is there. Can they come for $97? That's in there too? You come.
DM us.
Okay, huh?
DM us for the 97.
If you want to DM us, you can come for $97, okay? I don't sell anything there. It's 2 full days of training, kind of a no-brainer if you want to learn. By the way, guys, incredible opportunities coming, but you need to get up to speed as fast as possible. So, Theodore, you should come to that boot camp because I spend a lot of time on how to get funds, okay? All right. Hey, Marif, good to see you. So, what are we looking for when we check out the property? We want to see if there's deferred maintenance, okay? Have they been taking care of the place like they hadn't with that Nashville asset? And it was stupid stuff. There were plumbing leaks and things like that. So, we lit a fire under them. They're fixing them now. Is there any economic obsolescence? Things that you can do to immediately improve the economic situation there. But the big one is functional obsolescence because that's expensive to fix. Like I said, small rooms, low ceilings, small windows. So if there's any of that, that could be a problem. But these are the things you're looking for, very important. All right. So you're going to do environmental inspections. You'll always do a phase 1. By the way, I underline this. So, a phase 1 environmental is just to see if they had a dry cleaner there or a gas station or something that created an environmental concern issue. You always get a phase 1, even if you're doing seller financing, because a bank will always require it. But if you're getting seller financing, of course, it's not required, but you're crazy not to do it. Why? Because here's the deal. Let's say there was a gas station 30 years ago and there's no evidence of it. You don't even know it was there. If you buy it yesterday and the EPA discovers the problem today, you're responsible, not the person that sold it to you. You are. Whoever owns it's responsible. It's a small price to pay to have some peace of mind. So I tell my students, you always get a phase 1. Now, you may, depending upon what you see, you may have to get additional inspections, environmental inspections or other inspections, okay? For sure. Now, if you've got any issues with asbestos, I would not mess with it. I would make the seller remove it and with a licensed bonded contractor, then you'll buy it. Lead-based paint isn't as big a deal. It just has to be scraped and painted. Mold, the big thing with mold is you got to figure out why it's there, okay? Don't even worry about mitigating the mold until you figure out where it's coming from. Now, very often it's negative drainage where you've got a wall like this and it's draining in like this, or you've got an air conditioner that's leaking or a leak from another unit, but you got to figure out where the water's coming from first, and then you can mitigate the mold. It's easy to mitigate mold, but don't even screw with it until you know where it's coming from. But again, asbestos, make them fix it. Mold, not a big deal. You just got to figure out why it's there. Okay. All right, so when you're doing your inspections, these are the things you look for. Are there any hazards? Tripping hazards, because the lender will identify those. If a tree root has brought up, and I just tripped as I was describing this. If a tree root has brought up a sidewalk, you're going to have to grind that down or fix it because they don't allow tripping hazards. So you got to look for that. One of the things at the Nashville asset, there was a stair rail missing on some stairs. So we noted it because we knew we had to do it right away. There was an electrical box that had rotted and shifted. We knew that had to be fixed right away. So those are the kinds of things you look for. No big deal. Property's was built in 90, almost 30 years old. You're going to have stuff like that. This is a big one. Look at the drainage. That's one of the things I always look at. Because very often you'll have negative drainage and that causes structural issues, okay? So again, you look at the side of the wall and what is it should be like this, right? The ground should be like this, not like this. Very important. What do the downspouts look like? What do the gutters look like? Are they in good shape? So drainage, very important. Irrigation, you're looking at that. You're going to look at the landscaping. Are you going to improve it? Does it need to be improved? What do the garages and covered parking look like? That Nashville asset, the beautiful thing there is there's room for 3 additional 5-car garages, and there's a waiting list for the garages that are there now. So we're putting garages in. Kind of a no-brainer. How are the trash containers? Are they, do they have fencing around them? A lot of times they look terrible, and one of the first things we do is typically fence them in. Now, resident safety is hugely important, okay? What's the lighting like? Are there gates? Is it fenced? Is there a camera system? None of those things are great at that Nashville asset. That's the first thing we're doing is those 3 things. We already have bids on them, okay? And we don't even close for 2 weeks. What do the drives look like? Do they need to be resluiced? The paved. One of the things to add value is striping and numbering parking lots. I give this example. We've got an asset in San Antonio. This is an awesome example. And we striped and numbered the parking lots, parking spaces, and then we told the tenants, hey, if you'd like your own personal parking space reserved, right by your unit, it's $25 a month, you can have your own parking space. We had over 100 take it. You know what that did to our value? $800,000 increase in value by 100 people paying $25 a month more. That's why we love this business, guys. Okay, so you're going to look at that. Again, perimeter fencing. That's one of the things we always tighten up, okay, if possible. We had to fix a lot of the fencing on that San Antonio asset, and I just talked about this Nashville asset needs some fencing work done. We talked about gates, sidewalks, and you're going to do an energy evaluation. It's very possible that you can put LED lighting in, you can put water-saving toilets and faucets and stuff like that in, and it's very powerful. Hey, Alvin, good to see you, brother. Good to see you, my friend. I'm sorry I couldn't come to your event. I was out of the country. I'm sure the pictures look great. Craig, thank you, my friend. Yes, the boot camp is live streaming. Yes, you can watch it in your underwear and on a laptop. And again, it's $97 for 2 full days of training with nothing being sold. Kind of a duh. And guys, there is incredible opportunity coming, okay? Incredible opportunity in this business. So I don't care if you learn from me, but get up to speed quick because it's coming. Okay. All right. Building inspections. Now, when you're checking out the asset, obviously you want to make sure that you're not going to have any major expenses right away. Roofs is huge. Okay. Now, luckily that Nashville asset has all new roofs now. What do the foundations look like? We were a little concerned because there was some sagging in some of the floors. At that asset, we had a structural engineer go in there and told us how to fix it. It's no big deal. We've got enough money to do it. So, what's the facade look like? On the outside, the siding, there's like some missing siding on that Nashville asset. Easy to fix. We're going to fix it. But that's also called the building envelope or the skin. Okay. What are the windows and doors like? Are they going to have to be replaced? decorative items like shutters and vents and things like that. Very often vents will get beat up on roofs, and so when you have your, if the roof has, if there are any question marks on the roof, have them check the vents and stuff and see, if some of those need to be replaced and buttoned up, because those will start leaking after a while. Okay. All right, mechanical inspections. You think that's important? Checking out the HVAC. If you got a boiler or a chiller could be $100,000 or more. Okay, yeah, you better believe it's important to check those out. So you're going to be looking at all the systems, electrical, obviously. If it's dated electrical, it might be aluminum. If it is, does it have pigtails? Because it'll arc, and insurance companies don't like fires, so that's a problem. Okay. What's the gas situation like? Water, sewer. If there are a lot of trees, you need to scope the sewer lines. Okay, very important to make sure that the roots haven't destroyed the sewer lines. What are the HVAC like? If they're individual units, how old are they? It's about half the units on that Nashville asset we're going to replace. Okay, what's the fire safety look like? And safety in general, we talked about that. Internet is a factor. If they have elevators, of course, that's a factor. Irrigation, and we talked about, if there's a camera system, very important. If there's any controlled access to the units, like gating and things like that, what condition is that in? The trash disposal, what's that look like? Very often, when you've got dumpsters, the trash trucks will destroy the concrete or the pavement, and so you got to look at that. That happens a lot as well. So very important all this stuff is what you need to check when you're doing your inspections. Okay, interior inspections. Okay, now obviously you're going to check all the individual units. You're going to look up, down, and around and look at every single thing in those units and every room in those units. You're going to take pictures. You're going to video. You're going to look underneath the cabinets. You're going to run the water. You're going in everywhere. You're going to look under all the cabinets and see if there's water damage. You're going to look in the HVAC closet or the water heater closet, and you're going to see what's going on there. Has it leaked? Is there going to need to be repair there? What's the condition? You're going to rate everything. You're going to rate the appliances. You're going to rate the cabinets. You're going to rate the countertops, the floors, all of that. Unless you're going to replace everything, and like we are doing on that Nashville asset, we're pretty much replacing almost everything. But that's what you're going to check when you check the interiors of these units. Typically, you'll take a picture of the unit number or start the video there, and everything behind that is that unit. And that may be the only time you're in that unit for a long time. Okay? Okay, Theodore, I'm finding that the mention of owner financing is met with disgust. That's just been your experience. I've helped people one guy bought 500 doors from 3 different sellers with seller financing, buddy. So don't have that pre-frame. I promise you that you can buy properties that way. Okay, John is asking, where do we DM to lock in the $97 promos? Any one of my social channels, you'll get it. Okay, John. Okay. All right. So you're going to also inspect the common areas. Is there a pool? What's the patio look like? Do the employees have work areas, or the maintenance crew have a maintenance room or maintenance closet or maintenance area? Their storage areas for the asset where they're storing old, HVAC units and appliances and so on and so forth. Do they have recreational facilities of any kind? Playground, pool, shuffleboard, whatever. You're going to check all that. If there's any commercial component to the asset, self-storage, something like that, all that you're going to inspect. Super important. Okay. Okay. Now, what's the visible appeal of the property? How does it look from the street? How's the landscaping look? How's the paint look? Would you want to live there? What are the sight lines like? Can you see, does it look safe? Are there places people can get jumped? What's the lighting like? Go there at night. But is the property marketable? Okay, what's your first impression? If they're not taking care of it, it could be a problem, and you're going to need to deal with. But again, that's opportunity. Don't get Also, what's the signage look like? We had a beautiful sign on that Nashville asset. It's brick. It's like shaped like this, but in the middle of it, it's got the name of the complex, and that sign's all faded. But the brick thing is freaking gorgeous. So all we got to do is replace that middle. So that's super important. What's that exterior appearance look like? On that Nashville asset, there's a lot of white trim that's all, beat up and faded, and it all needs to be painted, every bit of it. No big deal. That's one of the first things we'll do, and it'll immediately dress up that place. And of course, what are you going to do on the interiors? on that particular asset. Like I said, if you can watch that, if you're accredited and you're just coming in, we are doing a presentation on that asset. There's still some slots left. We're raising 19 million. I said 18, it's 19. We're raising 19 million, but the returns are fantastic, okay, projected returns. So, but we're doing that Monday night at 8 p.m. So even if you're not accredited and you want to see how we present a deal, so what we look for in a market, in a submarket, what we look for in jobs, what we look for in employment, what we look for in the asset itself, you're going to learn so much watching us present that deal. So I'd encourage you to watch it even if you're not accredited, okay, because you'll learn a ton. So yeah, you want to step back after all this, and you're going to go in there and do your renovations, your CapEx, improve the property. Will you have a marketable and property that will compete with the other assets in that market? Super important to know that, right? Super important. Okay, operational and financial analysis. Okay, you're not just doing the physical inspection. You got to check the leases and the contracts and everything else. Now, a third-party property management company will help you with this. They had a whole team do that for us on this Nashville asset. Okay, but you're going to be analyzing income and expenses, and you're going to be inspecting all the documentation for these tenants and for the asset. But you're going to look at all the income, rent, of course, rent, fee income for utilities, fees for garages, fees for pets, fees for cable, fees for late pays, fees for applications. All these things come into play on the income side. And then you might be getting fee income from laundry and vending facilities, very common. Income from furniture equipment rentals. We're renting washers and dryers on our San Antonio asset. It goes right to the bottom line. Any administrative fees that are charged to a resident when they move in is very common. I told you about those parking fees. I don't know if I have that on. No, yeah, for parking spaces. So, you want to capture all the income, all the sources of income. Super important because, again, these properties are valued on a multiple of that net income. You take the total income from all sources less property-related expenses equals the net operating income, net income. And any increase to that is an exponential increase to the value. I'll give you another extreme example. We had a property in Ohio, Beaver Creek, Ohio, 101 units, which is a suburb of Dayton, a very wealthy suburb of Dayton. And 101 units. 3 months after we bought it, it got destroyed by a tornado. True story. Thank God nobody died. A couple of people got pretty seriously injured. They're okay. They had surgery. Thank God no kids got hurt. But all 101 families had to move. Okay? Well, we rebuilt that place, and we are getting 650 or more rent bumps. Guys, that is a $12 million instant increase in value on 101 units. 12 million. Yeah, that's why we like this business. Okay? All right. So, rent roll. You got to check the rent roll. And again, a property management company will help you with this. You want to take a look at what the physical occupancy is, but you also want to look at what the economic occupancy is. Physical occupancy is how many people are actually living there. The economic occupancy is how many are actually paying, right? Is that important to know? But then you'll be able to compare potential rent potential, with lost income due to vacancy, concessions, and collection loss, to come up with an accurate economic picture of that asset. Okay, so the rent roll is critical. That's one of the things you're going to need. Okay, you're going to do lease file audits. You need to have somebody check all the leases. You want to make sure there's rental applications in all the files. Is there a checklist for processing the lease? And a good company will have those. Of course, they'll have a lease agreement. When was it written? Who created it? Was it a legal a lawyer that created it? Are there more than one version of it? Super important to know. Are there addendums for different things? For utility billing called RUBS, Ratio Utility Billing System. Is there addendums for that? For submetering, or for safety, or accessing the gate, or for lead-based paint, or anything. Are those in there? Are there pet agreements? Like I said, let me tell you another great example of the impact of net operating income. At our San Antonio asset, my property manager did a fire safety inspection of all the units, 296 units. She found 60 plus people that had pets that we didn't know about. And we charge a pet fee. It's $20 a month, and you got to pay it, and a pet deposit. That was a $400,000 increase in value, okay? Again, that's why we love this freaking business. Okay, and you got to analyze the expenses, obviously. Now, at my boot camp, I go through all this in much more detail, but one of the things you do is you have to normalize the expenses, because you'll get a P&L from an owner, but you've got to normalize it and put your own spin on what those expenses look like. All right, let me see. I got a question here. Antoli, a lot of great information. Thank you. Is it okay to ask a seller before due diligence? Just flipped on me. I can't, if they're going to be flexible in case of critical repairs or fine. Well, that comes up after you've done your due diligence, okay? If there are things that weren't disclosed or maybe misrepresented that are significant, then you do what's called retrade. You renegotiate, say, hey, we found this stuff. You know, this is why you do a due diligence, so you have an opportunity to do this or back out. And I'm going to tell you, sometimes the best deal is the one you don't do, right? So keep that in mind. So you're going to analyze current and potential, pro forma expenses. And you better, if you do a pro forma on an asset, those expenses better go up just like the rents go up, because things cost more money, especially with what's happening with inflation right now. So you want to, when you're pro formaing a property over a 5-year period, I want to see expense increases as well, okay? But you're looking at operating expenses, capital expenses, and renovation expenses. Those are the sorts of things you're going to be looking at, and what's called normalizing. Again, if you come to my boot camp, we spend a good bit of time on normalizing each line item on a P&L. Normalizing, the advertising, normalizing the taxes, and just coming up with what your estimate of what it should be versus what the seller gave you, because a lot of times that's BS, okay? So it's important that you normalize it. These are some other things that you're going to be reviewing and looking at when you analyze the property. Obviously, you want to know what the current taxes are and what you can expect to pay after you buy it. That's a newbie mistake. Our tax is going to go up. You better freaking believe it, okay? What's going on with insurance? You should put the insurance out to bid, okay? And you should have a national broker. If you need one, let me know. I'll give you one. A really good one is one of my Warrior students. But you need to put the insurance out for bid, because insurance has gone through the roof too, especially in some particular markets like Texas. It's crazy. What are your management fees going to be? On a large asset, they can be as low as 3%. On a small one, it can be as high as 12%. You need to review all the service contracts, okay? Are they going to survive the closing? Laundry typically survives the closing, ownership change. So you need to know if you're going to be stuck with laundry. Like in that asset in Louisiana, we had horrible laundry equipment. And thank God it finally expired and we were able to put all brand new stuff in there. But we couldn't get rid of it. If there's delinquency and a lot of bad debt, who's going to own that? You need to know that. Are there deposits being transferred? What are you getting as far as personal property? that asset that we got in Louisiana, 403 units. They had one freaking golf cart. I bought 8. Okay, I mean, just stupid stuff. I had to buy a crane to put stuff on the, stuff on the 3-story roofs, and But what are you getting with the asset? It's important for you to know, right? So these are the kinds of things you're going to be reviewing and looking at. Okay, and then you're just going to evaluate and come up with a report, or just study your results. And this evaluation should include the market and competitive surveys. By the way, I told you I was going to tell you how to get these books. This one's called My Property Toolbook, and this one's called Complete Comprehensive Guide to Multifamily Due Diligence. Again, these are not inconsequential books. If you go to rodslinks.com, in fact, throw it in the comments if you would. rodslinks.com, you can get these books, and they're incredible resources. And there's a lot of other resources there as well. My social links and all sorts of there's free books. There's my best-selling book there. You can just pay the shipping and get that. But anyway, rodslinks.com. So anyway, where was I? So you're going to do regional neighborhood analysis. You're going to have your interior and exterior property inspections organized, so you know how many of each you got to, how many units need this, how many units need that. Important to know. You're going to do your income and expense analysis after you've normalized the expenses and normalized the income. So you've got your pro forma. What did you find in the lease file audits? Was there any problems there? And then you're going to have budgets. A good property management company will come up with budgets and recommendations. I know I'm blowing through this kind of fast, but again, if you can, I'm not going to get into property acquisition right now. I'll probably do that next week. But if you can come to my boot camp, for God's sakes, come to my boot camp. It's October 15th and 16th. It's virtual. I don't sell anything there. You DM me, you can come for $97. Now, if you're accredited, watch our webinar on Monday night at 8 p.m. What date? What's the date on Monday? What's Monday's date?
26th.
The 26th. and incredible deal that you need to get into if you're accredited and you've got some liquidity. But even if you're not, come watch how we present a deal and look at all the things that we look at in a market and in a sub-market, and it'll really help you to do your own thing. So let's see. Heath, nice pet and paid parking. Thank you. Yes, sir. Okay, Matt. Okay, I think that's all the questions. If you guys have any additional questions, feel free to ask me. Hope to see you at the boot camp. If not, to have you watch the presentation we do Monday night. And if not, have a great week. And hopefully I added some value here.